Well, good morning, everyone, and welcome to NIFA's Income Worksheet Training Session. Our team is excited to present to you our new Income Worksheet Calculator. Our goal is to provide you with a tool to make calculating NIFA income easier. We know that income calculations for our program are very different than your qualifying income for our first home program. And as you know, our Welcome Home program uses only your qualifying income. Some of you have experienced an over-income calculation by our staff, leading to stressful conversations with your borrower and restructuring a loan to get to the closing table. We hope this tool provides you with the resource to accurately calculate a borrower's income, fitting them into the appropriate program. Carrie is going to take over from here and introduce you to the income worksheet. She will also be providing some real-life scenarios utilizing the new worksheet. We are recording this session today, and I would encourage you, as Carrie mentioned, type any questions into the chat. Unmute yourself if you have a specific income question you would like us to address in the worksheet as we go along. And as always, we appreciate your attendance this morning and your partnership with NIFA. Take it away, Carrie.
All right, thanks, Stacy. Do we want to go ahead and introduce our staff as well first off? I think we're
Yes.
all on. Yeah.
Yep. Yes,
So
please.
I'm Carrie Buss. I'm one of the homeownership compliance reviewers here. I'll be leading the training this morning. Susan, do you want to go?
Oh, sorry about that. I'm Susan Lover. I'm the team lead for the reviewers.
And Ronnie, did you get logged on?
I am on, but I do not know if you can see me. I'm Ronnie. I am a compliance reviewer as well. Nice to see you all.
All right, and we do have a question in the chat. Are there any materials for this session? We are recording, so that will be available once we post it out online. But no, there are no send out materials for this training. It's just simply a walk through the income worksheet together. We're just going to go through the tabs, and then like Stacy mentioned, we'll have about 3 examples to go through live on screen for you. You're very welcome. Thanks, Teresa. All right, so let's get started here. This is our new NIFA income worksheet. We're just going to go through these tabs down here one by one. So this is your total household income tab. There's a place for you to put your NIFA loan number. There's a place to put your property county with a drop-down arrow here. So let's just play in Douglas County today. Place to put your household size with a drop-down arrow. Let's just play with 3 people in the household today. And a place to do target or non-target. Let's go non-target. And you'll see it pre-fills your NIFA income limit of $115,805. If we were to pick a county that doesn't have a target area, let's go Saline, where I'm from, for instance. And if you were to pick target, it wouldn't fill in anything there because there are no targeted areas in Saline County. So let's go back to Douglas here for our examples. And non-target. There's a place to put your NIFA staff reviewer, so you know who reviewed your file and the date they reviewed. Down here is a qualifying AMI mortgage insurance coverage calculator. This is for use on conventional loans only. I'm going to read this NIFA disclaimer here because it's very important. Hello, lender partners. This tool is intended to assist our staff when reviewing your submitted qualifying income for mortgage insurance coverage. Please review your AUS findings to ensure correct coverage. Please be aware that mortgage insurance coverage is determined by your staff and is dependent upon the AUS run date for all conventional loans requiring mortgage insurance. It is the responsibility of the lender to determine the coverage amount when ordering mortgage insurance for all conventional loans. The coverage amount is based solely upon your qualifying income from your AUS findings and is not related to NIFA's calculated household income. So since we're playing with Douglas County today, let's just type in Douglas. And let's just throw in a random figure here of 80,000. And you'll see that that computes to qualified income between 100,000, that does throw your qualifying income over 80% AMI, which would require you to purchase the higher or standard coverage. Any questions about that or how that works? All right, I'm just going to take that information out here. Our next tab is the borrower tab. You'll see it pre-fills the same information from the total household income tab for you. There's a place to type your borrower's name and your borrower's employer. And then down here is a pay frequency section with drop-down arrows, so you can pick, are they hourly, are they weekly, bi-weekly, semi-monthly, monthly, annual? Are we doing an average annual to date? Do they have any other income, overtime, bonus, commission, tips, and also a place to do projected raises annually or hourly. Down here, we have other sources of income. Again, there's a drop-down arrow for you to choose from, where you can enter child support, net rental income, pension or SSI benefits, VA compensation, unemployment, or any other types of income. And below that is a place where you'll enter their assets. So you can enter in checking, savings, health savings, retirement, investments like Charles Schwab or Robinhood, any of those, because of course here at NIFA, we do need all asset statements. So we're looking for everything, not just what you're looking for on your qualifying. Take these out here. And as you can see down here, there's a place where it enters total account balances after you type in amounts listed here, and a place where it totals the total yearly income. So up here will be your monthly amount under total job income. Down here will be your total yearly income. And if we go back to the household tab, that will pre-fill here at borrower income for you. All right, on to the co-borrower or spouse tab. Same thing here, a place for you to enter the co-borrower or non-borrowing spouse's name, a place for you to enter their employer, and the same drop downs for pay frequency, the same drop downs for other sources of income. And you'll notice there is no asset section because we're doing that strictly on the borrower tab. And same as the borrower tab, your monthly income will tabulate here, your yearly income will tabulate here, and then if you go back to total household income, it'll tabulate here for your co-borrower and non-borrowing spouse's income. Our next tab is the occupant tab. This would be for a non-borrowing occupant that wishes to take title only. So say you have a boyfriend-girlfriend scenario where the boyfriend is the only one on the loan, but his girlfriend would like to take title to the property. This is where you would enter her income information. So there's a place for her name and her employer, and same drop downs for pay frequency, same drop downs for income other sources of income, excuse me. And it will tabulate her monthly income here, total yearly income here, and that will follow you to the total household income tab. Next tab is your cosigner tab. This is new for conventional products only. As of September 6, 2023, we had a bulletin go out. So just a reminder here, including cosigner income on this tab applies to all conventional loan products. Cosigner income should reflect the monthly income as included on your AUS findings. There is no documentation requirement for cosigners on NIFA loans. So we're literally just going directly to your AUS findings to find that cosigner, typing in their monthly income directly from your AUS findings, and that will total here on your total household income tab for your cosigner. I do realize this is very new. Do we have any questions about this before I continue?
I don't see anything, Carrie.
Okay, thank you, Stacy. And our last tab here is an income calculation guide. We just on the homeownership team put together some random examples on how you would calculate using those drop-down fields here in pay frequency. Oh, we got a question from Justine. Do we have to include cosigner assets on the borrower income tab? No, you do not. We are strictly looking at their income from your AUS findings. No assets needed. Thanks, Justine. So yep, on the income calculation guide, these are just some examples. So if you run into a scenario when you're calculating income, you can pop over here to this tab and see how you would do that. Just a little step-by-step guide. And if you're in the borrower tab and you have a question come up, there's a little handy income calculation guide link here. So you can click on that. It'll take you directly to that tab. Just a couple ways to maneuver there. All right, do we have any questions on the income worksheet itself or the tabs included before we continue on to some examples?
I don't see anything yet, Carrie.
Awesome. All right, so I'm just gonna make this smaller here so I can pull up my examples. So our first income scenario here, we've got a VOE and a pay stub. We of course received the regular 30 days pay stubs for this borrower, but we only included one pay stub just for ease of the training here. So on this income scenario, the borrower just received a $3.36 pay increase as of October 16, 2023, putting her at $24 an hour. We will enter her income in hourly at $24 an hour for 40 hours a week, as per her VOE that says she gets 80 hours per pay period. If we scroll down to her pay stub, she's not showing any additional income like overtime or bonus. And we can also see on her pay stubs that she contributes to a retirement account and that her payroll is deposited into an account ending in 8667. So we're going to go down to our asset section here, put retirement, and put that account ending in 8667. So we'll be on the lookout for both those asset statements and any others as we review the file. So you can see here that her total yearly income is here with that $24 an hour at 40 hours a week. And that puts her eligible for our program because her income is under that $115,805 for a 3-person household in Douglas County non-target because she's at $49,920. Any questions about example 1? I know that was a quick one. I'll just take this information out here so we can continue on to our next example. Be sure when you're going through the income worksheet that you're backspacing information instead of deleting information so as not to disturb any of the calculations that are included in the income worksheet to make your income work. So just remember, backspace, don't delete. All right, for our second income scenario, the borrower currently earns $18.50 per hour at 40 hours a week per his VOE. However, if we scroll down here in the additional information section, he is due to get a pay increase January 1st of this year, putting his payroll at $19.50 per hour for 40 hours a week. So we are going to go ahead and enter him hourly at that $19.50 rate for 40 hours a week. We can also see that he earns overtime and bonus. That's evident on his pay stubs and his VOE. They call it other down here on his pay stubs. And his VOE has a good through date of December 21st, 2023, which is newer than the pay stub. So we're going to go off of that December 21st, 2023 date on the VOE. So let's enter in this overtime. And we're going to focus only on the 2023 column. So overtime year to date, $372.54. And let's enter in this bonus. 15/5/28/26. And we will average this for 11.68 months, which is January 1st, 2023 to December 21st, 2023. We can also see on his pay stubs that he contributes to a WIN savings account. So let's enter that in on our asset section so we can look out for that asset statement. And his payroll is deposited into a checking account ending in 6646. So we'll jot that down as well, so we can be on the lookout for those asset statements and any others as we review the file. We scroll further. This borrower also receives VA compensation in the amount of $755.28. So we'll come over here to other sources of income, pick VA compensation, enter in $755.28, and that adds the monthly income there. We also did receive, of course, as we need for VA files, the certificate of eligibility for this borrower. It shows an amount of $732, but this has a good date of September 12th, 2023. So that's why we're going to go off of this letter from the VA, because it has a current date of December 1st, 2023. So that's why we would use this $755.28 figure versus the $732 figure from the COE. So we've got all our income in minus our assets, of course. We'll be on the lookout for those. So it does show his total yearly income here, which does also pull over to the total household income tab and shows he is eligible for our 3-person household in Douglas County at $115,805. Any questions about this example?
I don't see anything, Carrie. We've got a quiet group this morning.
Yes. Okay, so I'm just gonna backspace this information out here. Please feel free to ask questions anytime. This is very informal. We want you guys to have the best experience with this income worksheet as possible. So if you have anything, just feel free to ask. There are no silly questions. Okay, so for our third income scenario, in this example, we have married borrowers. Oop, we've got a question. Do we need to gross up VA disability for DT? If we need to gross up VA disability for DTI, do we reflect that higher income on the worksheet? We are not going to here at NIFA. We only use what's given to us on the COE or that letter from the VA. If you gross up on your end, that would only be for qualifying. So I wouldn't put that gross up on your income worksheet as you're calculating. Thanks, Melissa. Great question. Okay, so our first borrower of our married couple here earns $20.76 per hour for 40 hours per week with an unknown projected pay increase on her VOE. This VOE does have a good through date of 12/28/23, which does coincide with her pay stubs with a pay date of 12/28/23. So we will go ahead and enter in her hourly rate at $20.76 per hour for 40 hours a week. Per her VOE and pay stub, she also earns overtime. And then there is this PT pay stipend down here that we must also include. So let's plug those in. So overtime first. $542.67. And we're gonna pick other for this PT pay stipend. And we're gonna enter in 11.90 months for these two because that is January 1st, 2023 through December 28th, 2023. I'm just gonna name this one PT pay stipend just to show you how you can type in the comments here. anything you need if that helps you keep things straight here. We can also see on her pay stubs that she contributes to an HSA account. So let's go down here and put in health savings so we can look for that. And a retirement account. And her payroll is deposited into an account ending in 0307. So let's add that as well. And for her husband, we received a verbal VOE, which we know is a no-go here at NIFA. We must have written VOEs. So in order to not hold up the income calculation on this file, we go ahead and go down to the pay stubs just so we can keep the file rolling. We'll go over to our co-borrower spouse tab. And I know this one's a little hard to read here. This borrower earns 1,033.20 weekly, which coincides with his pay rate of 25.83 an hour at 40 hours a week. So this borrower could be entered in either way. Let's just do weekly since we've been doing a lot of hourly. This borrower also earns overtime and double time per his pay stubs. So let's enter in that information. And I'm going to do these separately here. And I'm going to divide this by 11.87 months. Oops, 11.87 months, because that is January 1st, 2023 through our date of deposit of December 27, 2023. And I'm just going to label these OT and DT just so I can tie them to the pay stub if I have any questions as I go through the file. This borrower also earns reimbursements on his pay stubs. We do not have to count reimbursements here at NIFA. What we do have to count are allowances, like a cell phone allowance or a travel allowance, but we do not have to count reimbursements. We have a question in the chat. Are verbal VOEs not allowed for occupant and non-occupant borrowers? We must always have written VOEs here at NIFA. The only time we would accept a verbal VOE is when it's a termination VOE. So we must always have written VOEs for borrowers, co-borrowers, non-borrowing spouses, and any occupant that wishes to take title. And Ed asks, can you confirm you are using the actual pay date versus the payroll ending date? We do. We use the date of deposit here at NIFA, or we use the, I'll scroll back up here, or we use the year-to-date date on the VOE if that is further out than the pay stub. We always go with the furthest out date. That's just one of our practices here at NIFA, is to go with the furthest out date. Okay, so back to this example here. We can see that this borrower deposits into a checking account, so we'll be on the lookout for that. So we're going to go back to the borrower tab where the asset section is and type in checking. Since these are married borrowers, this 0307 account could be the same checking account that he deposits into as well, but we'll know more as we review the file. Oops. So our co-borrowers information tallies here for total yearly income, our borrowers here. And if we go to our total household income tab, they tabulate here with a total household income of $116,437.89, which unfortunately puts them non-eligible for our program when we're still working in our Douglas County example of a 3-person household out of 115,805. So at this time, we would still wait to get that written VOE in because perhaps there's information on there that can help us keep this file under income. Perhaps we can average the OT or DT or anything like that. We would just know more once we got the written VOE. If it does turn out that this file is over income for our first home program, we as reviewers, of course, would offer your clients our welcome home program and let you know what that interest rate would be so you can inform your borrowers. Any questions about scenario number 3?
There is a question out there, Carrie, from Megan.
All right. Megan says she does not see the NIFA income worksheet listed as a required document on the pre-close checklist. Is this required to be completed by lenders and submitted with the pre-close package, or just an option to help us review how you would ensure eligibility earlier in the process? So that answer is twofold, Megan, and great question. As of right now, submitting the income worksheet is not a requirement for the pre-close review. However, we are considering changing that. We will know more by our lender conference in April if we decide to go that route. But yes, most importantly, this is an option to help lenders review income prior to submitting the file to NIFA, so you can lock your borrowers into the best program for them. So great question. We would encourage all of you to use this income worksheet as you review your borrower's income, just to make sure that yes, they would qualify for a first home, or lock them welcome home if they're over income limit. If you ever have one that is close, you're always welcome to reach out to us to do a pre-qual for you. We just ask at that time that you provide the income worksheet that you have done in advance, so we can see where you've got them versus where we've got them, so we can kind of help you along since this is so new. So hope that helped. Thank you. Great question, Megan.
Carrie, do you see the questions sitting out there?
I do. I just popped in. Yep. So Deborah asks, on this example, other wasn't much, but what if it's a one-time bonus that puts the borrower over income limit? Employer can document it's one time only. Could the bonus not be used for ensuing income, then get the borrower under the income limit? If you guys can get something from the employer that says it's a one-time thing, we can remove the bonus. But if we can see that they got a bonus in 2023, in 2022, in 2021, then we're going to count it.
Could we average those, Carrie?
We would do a 24-month average of the bonus. Yes. Thank you, Stacy.
You're
Yes.
welcome. And then I think Chelsea had a question. Where can you find the income worksheet on NIFA's website? It's not actually on our NIFA.org website, but it is available in the program documents section in Lender Online. So you can certainly get it from there.
Any other questions? Any examples that you can think of that you'd like to see work through?
This is your opportunity.
We want you to be as comfortable with this worksheet as we are. So please feel free, ask anything.
There's a question, Carrie.
Oh, thank you, John. What if the borrower has variable income, hourly worker scheduled for 40-hour work week, but pay stubs show 40, 38, et cetera, et cetera? Do we always use highest case scenario? With those values being so close to 40, yes, John, we would do highest case scenario. However, if you've got one that's all over the board, say 40 hours here, 20 hours there, 15 hours, 30 hours, then we would do an annual to date, and that can be done right here, annual to date, and just let's just go grab the amount from this borrower's VOE of that 42,759.19 and do our average of 11.90 months And that gives you your monthly income there. And just don't forget to plug in per amount of overtime as well when you do that. But yeah, great question. Heidi asks, is NIFA looking at household income, not what is only being used to qualify the borrower? Yes, NIFA always looks at total household income. Our income will almost always be higher than your qualifying income because we look at everything. We look at VUEs and pay stubs for any current job, whether they're full-time, part-time, all of that stuff. If they work a side job for DoorDash, we're gonna count that as well. And there's ways to do that on here. Just to do your annual to date, if they've got a profit and loss for DoorDash, $1,000, plug that in. Let's just pretend it was for the whole year of 2023. And you can list that here. Just to keep it straight. Let's also say this borrower works part-time at McDonald's. $12.50 an hour at 20 hours a week, and you can put that in here. So yeah, we need everything here at NIFA. Oh, John asks, how do the assets count toward the income? Let's just plug some in here. So let's just say we've got a checking account of, excuse me, $1,000. Got a savings account of $5,000. And you can see how that pulls in the 0.30 here. I'll make that bigger, sorry. The 0.30 because we are just taking 0.06 of anything over $5,000 and putting that into total yearly income. So very small amount. So even if, let's say, your borrower had a 401k with $500,000 sitting in it, it only tabulates to $25.30 that we have to add to the total yearly income. So it's very, very, very rare that your borrower is going to get thrown over income due to asset statements. They've got to be really close to income in order for those assets to throw them over.
Carrie, the question is, does HSA need to be included in the assets? This is for medical bills.
Unfortunately, yes, here at NIFA, we do include health savings accounts in our asset section. We sure do. We'd like to not, but our attorneys say we have to. Thank you, Diane. Yes, Amy, great question. We do count child support. So there is a section here in other sources of income where you can plug in their monthly child support amount. And of course, we take that either from their divorce decree or from the printout from DHHS, whatever you've got, we need proof of that.
Keep those questions coming. Anyone have something on their desk they're curious about? How NIFA would look at it?
Good morning. I have a question on the child support.
Sure.
If you have a scenario where you find on the divorce decree that they are owed child support, but what if that ex-spouse or whatever the scenario may be, what if they don't pay?
Great question. Is this Carrie?
Yes.
Okay, yes, thank you, Carrie. Great question. So we would accept a printout, like the printout from DHHS showing what's actually been paid or not paid, and then we could do an average on that.
Okay, sounds great. Thank you.
You betcha. Great question.
Carrie, there are a couple of more questions in the chat.
Okay, scrolling up here. Deborah, I hope I answered your child support question with Carrie's question as well.
And then Tanya had a question too.
So your per day calculation is always the amount of days worked in that month divided by 30 or 31, depending on, yes, that is correct. Yep. So we just take, let's just, for these particular examples, we picked pretty easy ones just to help the presentation go smoothly. But yeah, if your borrower has been at their job all year for 2023, we would just take January 1st through whatever, obviously it's January 2024 now, and just whatever the good through date is on the VOE or the pay stubs, we would use that and then divide that by the number of days of the month. Great question. Any other questions? Oh, John asks, so if child support will only continue for 24 months, does NIFA still include? Yes, yes, John, because we project income out 12 months here at NIFA. So we would put in that child support for, to tabulate for the year. Yeah. Now, if you've got a child that's turning 18, in the next 6 months, then we would only count 6 months of child support. That's why it's so important that we get those divorce decrees in that show us, or the GHHS statements that show us how long that is to continue. We do get asked a lot how we find out about child support, like when we condition for child support statements on files. We have a policy here at NIFA that if we see a single borrower with dependents, we will always ask for child support in that instance, or if their last name is different than the borrower's last name, or we just have some things that throw up that red flag there that we need to have child support explanations. If your borrower does not receive child support and there is no order for child support, then we would simply accept a written and signed LOX from your borrower stating that they do not receive child support or alimony for that example. And just a reminder that you can find the new income worksheet out in program documents and Lender Online. You'll get the same Excel spreadsheet that we're using today. Since it is so new, we have done some very current revisions to it, and you do have the most recent version out in Lender Online. But if we ever update that, we'll make sure that there's always the current version out there for you in program documents. After we do these trainings, we hope to come across some things where we can make improvements to the income worksheet with your input. So we appreciate all the questions. We appreciate any input you have. Heidi asks, if the child turns 18 prior to closing and has a job, does that need verified as well since they reside in the house? No, we do not count income from non-borrowing occupants that are not taking title, including dependent children.
Amy asked a question also. Do you look at deposits on bank statements and question those? Currently, I have a borrower that receives deposits from a friend.
So Amy, great question. We do not have an explanation of deposit policy, whether it's a specific amount that we're looking for. But if we're seeing reoccurring deposits, or if we're seeing really large deposits that we can't tie to payroll, for example, we are going to ask for explanations of deposits on those. And your borrower can just do a very simple, these are deposits from a friend. Say they currently have a roommate that's helping them pay bills until they move into their new house. You can simply do an LOX for that. Oh, there it is. Okay, so yes, if your borrower is having a friend deposit the friend's payroll into their account, you have to do an LOX for that. Otherwise, we're going to wonder where the VOE and the pay stub is from Kawasaki. So yes, just please have your borrower do an LOX that is his friend's payroll that he uses his account, et cetera, and you'll be fine. We won't need that.
And then Ed asked a question about boomerang kids. But they don't count unless they're taking title. So kids maybe that moved out and then moved back.
Yeah, sorry, Ed, what do you mean by boomerang kids? Or do you mean kids that live with both parents throughout the year, or because we do count dependent children of the borrower 18 or excuse me, under the age of 18 as, okay, so older kids that move back home. If you have children that are over the age of 18 that are residing in the home, we just consider them non-borrowing occupants and we don't count them at all. So say you've got a 22-year-old that moves home in between college and getting his or her career, we are not going to count that person in our total household count, and we're also not going to count any income that they receive. So yes, as you're going through the income worksheet, if you have any questions, please feel free to reach out anytime. You're welcome to contact Stacy, Susan, Carrie, or Ronnie via our phone numbers or email addresses, or of course we have the homeownership@nifa.org email address that you're welcome to pose a question to anytime. We all have access to that, so we all monitor that email address throughout the day. And yeah, this is out in program documents and Lender Online, so please start using it as soon as possible to help you determine which program fits best for your borrowers. Thank you very much, everybody. Have a great day.